South Africa has its first stock exchange listed company with a Bitcoin Treasury reserve. That company is Altvest Capital, which is changing its name to Africa Bitcoin Corporation, or ABC, and it plans to raise $210 million to put this Bitcoin reserve strategy in place. Now, it follows the trend set by Michael Saylor, the founder of MicroStrategy, which is now simply called Strategy. That's a NASDAQ-listed company involved originally in data analytics. 5 years ago, it embarked on its own Bitcoin journey, putting spare cash into Bitcoin. It doubled up on the strategy, started borrowing huge amounts of money, and it's an interesting thing. This strategy is now copied by hundreds of companies around the world, including Africa Bitcoin Corporation. So this is quite a historic moment for Africa, and let's introduce our guests. We've got Stafford Masie, tech entrepreneur, who was responsible for introducing Google to South Africa back in 2006 and is involved in a lot of other companies as well. And we got Fadil Motti, CEO of 80eight, and Zaidan Motti, marketing head of 80eight. I hope I got all of those right. So Stafford, let's kick off with you. And first of all, welcome to all of you.
Thank you. Thanks for having us.
Thank you,
Okay, Stafford, if we can kick off with you, did I get your background right? Do you want to go into any more detail about that, or can we start with just go right into it?
Yeah, I think it's okay. I think what most people probably want to know is kind of our positions relative to crypto, right? So as far as I'm concerned, I'm a Bitcoin maxi, so I don't focus on any of the other altcoins. For me, there is only one. So I think what sometimes differentiates people will want to know that, right? So the reason is I got into Bitcoin in 2014. That's when I started dabbling in it, and it took me 24 months to realize what Bitcoin was versus anything else. It took me 24 months to go off the highway and go into Ethereum land and altcoin land, and then into blockchain land, and then wait a minute, this is dumb, and then back into Bitcoin land. And I've been probably a Bitcoin maxi, honestly, probably from 2016. 2014, I got into this space and started to understand it really well. And since then, I've been really focused on Bitcoin. It's interesting to see all the other coins. For me, they're interesting computer science endeavors. They are unregulated securities, but I think it's so important for us to differentiate between, kind of Bitcoin and everything else. And that's not a fanatic thing. That's not an argumentative thing. We got to recognize, and I think what was amazing of Bitcoin's growth over the last while, I think the last kind of 6 months, I think the altcoiners, the folks that are in the other coins, have kind of stood back and said, okay, wait a minute, Bitcoin is digital gold, right? Bitcoin is different. Bitcoin is the only digital commodity. And then you've got everything else. And I think that's so critical because as much as I'm involved in Altvest and we're building out, ABC, the Africa Bitcoin Corporation, and that's really exciting, I'm very much involved with the regulators in the country in an advisory capacity and in other businesses that I have interest in. And it's been very important for me to engage with them to ensure that they understand from a regulatory perspective, you almost have to separate Bitcoin out. Because if you only have crypto legislation, you're not going to enable the space because you've got an immaculate concepted, coin called Bitcoin. Yeah. And that thing is a digital commodity. It's the world's first digital commodity. We've never seen anything like it. So it stands separate from everything else because it has this unique characteristics. And once you understand that, then you need the Bitcoin regulatory framework, and then you need the crypto framework, right? So I'm working very hard to ensure that our regulators from the SARB, the IFWG, the JSC, FISC, everyone to kind of look at the space properly. And it's not about a religious view of Bitcoin's better than that. It's not that at all. There's a digital commodity, and then there's everything else. And I think it's very important for us launching the Africa Bitcoin Corporation to differentiate this. This is not a crypto strategy. Warren and I and the team are not launching crypto on the JSC. We're not. What we're doing is we're creating a Bitcoin treasury company, hyper-focused on Bitcoin. It stands alone. It's a digital commodity. It's not an unregulated security with a CEO and a bunch of developers somewhere working on the protocol, right? So it's very different. And I think that's so important when we talk about these treasury companies or we talk about this space, because else it just gets murky. People ask, are you going to launch a Solana or an Ethereum reserve or like these weird things that we see happening? That does muddy the waters for regulators, because regulators haven't done their 10 to 20,000 hours of studying the space. So they're regulating from a point of view that's quite anemic at the moment. And so it's our responsibility to make sure that we differentiate and give clarity to the space. Yeah.
fiat. And let's explain fiat. Fiat is our existing currencies. It's the US dollar, it's the rand, it's backed by nothing but government decree, right? Do you believe that these fiat currencies are headed for the knacker's yard? They're eventually going to just disappear. Something's got to take its place.
Fiat currencies take a while to go away, right? And to understand Bitcoin, you almost have to. What I love about Bitcoin is the way I've looked at it with my kids. I have a daughter that's about to be 25. I have a daughter that's about to be 22. And when I got them down the Bitcoin rabbit hole, what was very interesting observing them, and they've been in it about 5 years now, where they've actually taken their money, pocket money, things that they've earned, and they've put it into Bitcoin. And what's quite fascinating is to see a young person's evolution from a Bitcoin perspective, because when they look at their money gets stronger. Their money doesn't deflate. And in fact, because they've been in it for more than 36, kind of more than 48 months, they live in a world where they suddenly seeing everything going and getting cheaper. Right? If you take a look at my house, right? My house was 5 years ago, a couple thousand Bitcoins. You go back 3 years ago, it's a couple hundred Bitcoins. Today, my house is probably like kind of 5, 6, 7 Bitcoins. Right. So every year, even though my house price is going up, if you take a look at the cost of maintenance, if you take a look at the rates that I pay, if you take a look at the buying power of the underlying fiat currency that it's measured by, yes, it may be going up, but if you really look at the net graph, it's actually going down. And when you look at the Bitcoin world, everything gets cheaper. And when you put your Bitcoin lens on as a young person and you start saving with this technology, this asset, this commodity, that's what happens. So, and it changes your perception. It changes your career trajectory. It changes your outlook. My kids are so different from the rest of the kids that they in their ecosystem of kids because they see the world getting cheaper. Like every year, things are getting cheaper. So the problem in the world right now, people say my groceries are getting more expensive. No, your groceries are not getting more expensive. Your currency, your money is getting weaker. And kind of that's where we're at. I don't know. Should I pause there for a second?
I think Kieran dropped off, but you're rambling on something. Yeah, carry on. Yeah.
So I think for young people, that's the thing, right? To get that. And that's quite a thing to get, is that your groceries are not getting more expensive. The money is getting weaker. And when that lens clicks on, you actually Neo in the Matrix. Right? Suddenly, Morpheus has given you this pill and you can kind of see, wait a minute, I'm in a matrix, I'm in a pod, I'm just a piece of energy. I'm like a human battery and the machine is what I'm feeding. And I think that's a good metaphor for fiat currency. So fiat currencies are, if you go take a look at understanding Bitcoin, you almost have to understand the fiat world. And what I always tell kids, don't go rush off and buy Bitcoin, study Bitcoin. Because it is the funnest thing to study, believe it or not. And that's coming from a guy with a tech background, right? I didn't think I was going to get into economics and money, etc. But since I've gotten into it, it's been like one of the best fascinating areas I've ever gotten into. Like the history of money. Where does money come from? And how does money work? And then you start picking up these little anecdotal things about money. So we used to be on hard money. So when we talk about hard money, we talk about gold. Right, we used to walk around. So the history of money, if you go back, there was feathers, there was shells, there was these rocks at one point in time. But there's a book called The Bitcoin Standard. If you go get that book, just read that book by Stafford. And he goes into the history of money. And we used to use spices, we used to use various different things to transact and to have commerce. And but then gold became kind of the standard. So gold's been the hardest money we've ever known. Gold has been a standard that we used to be on. In the Roman times, there were gold coins. During the Renaissance, we were on a gold standard. And if you take a look at human history, what's very fascinating is when you fix the money, you fix the world. If you take a look at the Renaissance, the reason they built the things that they built and they painted the things that they did and they sculpted the things that they did, I would argue it's because the money was hard. There was sound money. So you lived within your passions, and your passions that you lived out, you were compensated for your time and energy, and you could put it somewhere where a government couldn't print more of it, couldn't make more of it. So if you take a look at gold, they call it stock to flow. So the amount of stock on the earth of gold relative to the flow of gold coming out of the earth that we've mined sits kind of 1 to 2%. Since its inception, we've never been able to take more than 1 to 2% of what we have on the surface out of the surface, right? Since gold's existed. And that has given gold a level of certainty and a level of scarcity, a numerical scarcity. And that hardness is the substrate for pretty much everything. It was the substrate of the Roman Empire. So when the Roman Empire came along, they had gold coins, right? And they went to war and they hoarded gold, etc. But then they couldn't get more gold to pay for more invasions. So you know what the Roman Empire did? They started melting other metals into the gold coins, right? And that's where the term sound money comes from. It's when you commoners knew when you dropped the coin on the floor and it made a particular sound, you could determine whether it was gold or kind of a hybrid. It was gold mixed in with another metal. So that's where the term sound money comes from. So that's what the Roman Empire did. They started melting other metals or non-gold into the gold. They issued out more coins. And when they could issue out more coins, they could go to war because they could fund their wars. They could go and invade more countries. But inevitably, that deflation, that inflation that resulted in a deflation later on in the collapse of the Roman Empire was because they went off a hard monetary standard and they went towards a hybrid standard, which was gold mixed in. So this is kind of what's happened in the world today. We stuck on the gold standard. And then we had there was, and I don't want to get too technical in terms of the history, but in 1971, Richard Nixon got up and he said in front of everyone, and he separated the dollar, which is the global reserve currency, he separated that from gold. And when he separated that from gold, then it allowed the United States Fed to print money. So just like the Romans could bleed metals into gold, now he's got the Fed, and the Fed can just print money. And that gave them the money to go into Vietnam. That gave them the money to invade the Middle East. I mean, they spent $9 trillion invading the Middle East. Where did that come from? The American taxpayer? No, that was the Federal Reserve printing money, not backed by gold, backed by peace in the United States, backed by sentiment, backed by politics, backed by a military. That's what the money's backed by now. And this hasn't stopped. So if you take a look at COVID, they printed again. So just a stat that will blow everyone's mind. If young people should go and investigate this, just like the Romans bled foreign metals into gold to make more gold so they could pay for their wars and fund their misuse, which led to their collapse. The same thing happened in the Renaissance. It's happened today. More than 80% of all the US dollars in circulation today were printed in the last 5 to 6 years. Let me just say that again. That stat blows your mind, right? In the last 5 to 6 years, we've printed 80% of the global reserve currency. So wait a minute. The United States is sitting with $37 to $38 trillion of debt.
35.
These numbers don't make sense, right? Kieran, are you trying to come in?
Yep. Just an interesting follow-on from that is that, sorry, my camera seems to have bombed out on me for the moment, so I'll try and fix it in a minute. But an interesting stat is that everybody looks at the rand versus the dollar and how much is depreciated against the dollar. What they're not looking at is what's happened to the dollar in terms of its own purchasing power parity. And if you go back to, I think it was 1913, which is the formation of the Federal Reserve, the dollar has lost 99% of its purchasing power. The rand against the dollar has lost an equal amount, almost an equal amount. So that just tells you what has happened to money. And Bitcoin is coming in and it's got no inflation. So you're only going to have 21 million of them ever.
We jump in there. I actually want to tell the folks listening, somebody published this out. Since 1994, the South African rand has lost 98% of its buying power. So let me say that again, 98% of its buying power since 1994. Now, that means if you stored 100 Rand in a bank account in 1994, and you fast forward to today, what you could have purchased back then, you've got 2 Rand actually in your bank account. You've got 2 Rands worth of buying power. I mean, it's mind-blowing. And the reason that's happening is debasement. They have to print more money. The underlying structure of our economy is no longer gold. Our currencies are not linked to gold. Now, the thing that makes the US dollar so powerful is that everyone utilizes it for transactions in the world. It's the greatest liquidity pool in the world. When nation states settle themselves, if Thailand wants to buy something from Egypt, right, they're not going to use the Egyptian pound. They're not going to use their local currency. They're going to use the dollar. because that has the necessary liquidity, that has the necessary stability, security, etc., and they utilize that. That's all the dollar has right now, but it's not a mechanism to save in. So young people, you don't save in fiat. You earn fiat, time and energy, and then you go and buy the hardest asset that's ever been known to mankind. That's harder than gold, and that is Bitcoin.
All right. Fadil, why don't you jump in here and give us your thoughts on this?
Yeah, I definitely agree with everything Stafford has said, and I think we've been Bitcoin maxis for a number of years as well. Getting in at a young age with a bunch of friends was our early stage adoption, and ever since I've been telling, since my dad and family, listen, buy Bitcoin and accumulate Bitcoin. It's quite funny. It was my birthday the other day, and we put a story up. It was back in about 8 years back. I was turning 23 years old. And my dad got me surprised me with a Bitcoin cake because I was such a maxi.
Awesome.
To celebrate. I mean, we estimated that cake costs around 500 Rand, but today is worth that 500 Rand, if you had put it in Bitcoin, is worth 4,400, like 525% increase. And I think that's incredible. So if you look at like what inflation has done to our money, whether you're a consumer or you're an investor, your money is just being eroded away. But if you consistently put your money into Bitcoin, and that doesn't mean taking all your net worth or your life savings, like people did in the early days, some of them worked out, some didn't. But if you had just put a bit of money into Bitcoin on a weekly or monthly basis, your wealth would have done much better than any stock market or investment overall today. Looking at it over 5 or even 10 years, just on average, you can get a 50% plus increase year on year just by investing on an average basis into Bitcoin. So I think that's definitely the crux of this technology and where we're at in terms of money debasement. And I think now that I think we can all say that we're right? Looking at the US and looking at the adoption that's happening, Bitcoin is going to be a global reserve. And the most important is, how do we educate people on this? Stafford, you had a lot of great points. Where people could look to the Bitcoin white paper, or reading a book or two, and just some research. I mean, GPT's got tons and tons of information available to our users and people out there. But the best way for them to learn is to experience it themselves. Buy a little bit. One thing Ziran would always say to his user base is 1,000 Rand of Bitcoin can take you a long way. Buying that 1,000 Rand every single week on a regular basis, putting that into a wallet of your choice, whether it's with an exchange or a non-custodial wallet, that's something of value. It's going to teach you how that works. And it's not something that you have to consistently focus on, where I need to look at the price all the time. If you just zoom out and you look at the price overall, your net gain is unbelievable. So yeah, I think there's a lot to take from what you've said, and a lot that our users need to understand, and most important, experience.
Yeah. So for me, it's dollar cost averaging, right? So a lot of people think, wait a minute, Bitcoin costs like $120,000. It's 2 million Rand. Like I can't afford a Bitcoin. But no, you can buy decimals of a Bitcoin. Those are Satoshis. And kind of that's what my kids do. They're not putting 1,000 Rand a week. They're putting a couple hundred Rand. But if you just keep doing that, that compounding is quite profound over a period of time, especially in relation to a fiat currency. I still believe one BTC is one BTC, like one Bitcoin equals one Bitcoin, right, in Bitcoin land. But the reason it keeps going up in fiat money is because the money keeps doing this. The money is collapsing. Bitcoin's just staying Bitcoin. Bitcoin doesn't care about anyone else. Bitcoin is just one Bitcoin. But the problem is the currencies keep collapsing, and that's why it keeps escalating. So yeah, if you're a young person, it's, take 50 Rand a week, take 100 Rand a month. And if, take a little bit of your cash and just put it somewhere and like put it into Bitcoin and just hold it for 36 months, 48 months. The deal that I have with my daughters, they've got to do this weekly, monthly until they're 30. So in the next 5 to 6 years, my investment thesis is I think one Bitcoin will be around a couple $1 million. I think it's inevitable, right? So imagine that. So you can just kind of see, if you do it in this way, where you're preserving your time and energy as a young person in hard money, the hardest form of money we've ever known, what happens? And the problem with Bitcoin is, like, people have never experienced hard money. When I go, like, I was on the board of Discovery Bank, right? I spent a lot of time talking to Adrian Gore. I've spoken to CEOs of Naspers. I speak to CEOs. You know who are the hardest people to convince about Bitcoin? Are those guys. You know, I go to a Shabin owner in El Dorado Park where I grew up, and I talk about Bitcoin, and she gets it like that. I talk to a young person, they're like, yeah, they get. It's very strange that, you know, folks at that level just can't seem. And the reason is, when they studied their MBA, when they did their economic degrees, the way they run their companies, the world has never had perfect money. In its history, it's never had perfect money. And now suddenly it has perfect money. And can I tell you something? The world doesn't know what to do with perfect money. Like, no one knows really how to value Bitcoin. They don't know. So we're seeing, like, Bitcoin treasury companies popping up, like the one we've launched, the Africa Bitcoin Corporation. The reason we've launched it, and this to give, so just to give young people a view of how big this is, right? BlackRock issued out an ETF. An ETF is an instrument that gives you direct see-through exposure to Bitcoin. So you don't have to. So the thing with Bitcoin, it's a little bit like cypherpunky, right? It's a little bit technical. So folks are like, so where do I go buy it? Then you say, okay, you can buy it at Luna or Vala or whatever the exchange may be. And then they go off and they go, okay, so you guys keep saying not your keys, not your coin. So what must I do with it? And you say, no, take it off and put it onto like a stick, or put it on, or stamp it in metal, or write passphrases down. And that's very empowering, but it's very scary. So people look at that and they go, whoa, 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 whoa. So there's a challenge that people have out there where they want exposure to the asset, but it's a little bit too technical and too complicated. So what they do is they go buy spot ETFs. So BlackRock issues out a financial instrument that's a direct see-through on the Bitcoin, and you can own IBIT. And IBIT is a ticker that's directly correlated to the performance of Bitcoin. Now, when they launched this, 50 billion inflows in 11 months. That's the fastest growth of an ETF in the history of ETFs. Who's buying this? Not mom and pop shops, not you and I. The people that are buying IBIT is high net worth individuals in large organizations. So large organizations have the same challenge that you as a young person have. They see their money sitting in the bond market. They see their money sitting in bank accounts. They see their money in diversified property portfolios and trusts. They look at all of this and they're like, wait a minute, we can't outrun inflation. Our money just keeps getting less and less and less. So they're all collapsing into Bitcoin, but they can't own Bitcoin keys. So what do is they get exposure to Bitcoin in an kind of an indirect way through an ETF, and they flow into it. So Bitcoin treasury companies are the same type of thing, right? In a very different way. So Bitcoin treasury companies are companies that say, I'm going to take my organization and I'm going to spawn a treasury. And if you buy my equity, I'm going to increment my treasury. I'm going to go buy more Bitcoin. And then I'm going to wait, and I'm going to wait for my market cap of my company to go up. And when that market cap goes up, I'm going to issue out a little bit more shares, and in an accretive way, I'm going to go and sell more equity, and I'm going to buy more Bitcoin. I'm just going to keep buying Bitcoin, keep buying Bitcoin, keep buying Bitcoin. People that like this are folks that are not cypherpunks. They just want exposure. And even Bitcoiners love it, because what's better than Bitcoin? More Bitcoin. So what companies like Africa Bitcoin Corporation will endeavor to do is to increase the Bitcoin per share. So if you buy into our strategy, this is what you're buying into. I'm going to take your money and I'm going to accretively build this Bitcoin treasury. And essentially what I'm trying to do all the time is improve the BTC yield. And that means the share that you own, I want you to own more Bitcoin per share relative to this. And that's that's so important, right? So it is risky, but it's levered, it's risky. But my sole objective is to make your Bitcoin more Bitcoin. And I'm constantly trying to outperform Bitcoin's standard performance. Go ahead, Zayda. Sorry.
Stafford, I just want to just quickly ask you, I'm curious to know if you have a set goal in mind for a BPS score that you want to achieve.
You know, here's the BPS score that we want to achieve, the Bitcoin per share. is to constantly increment it in an accretive way. So that's the score. What at an aggregate layer, what we're trying to achieve, philosophically, I believe 1% of all the Bitcoin should be owned by an African organization. Right? I believe we should own at least 210,000 Bitcoin should be on the African continent in some way or form in terms of ownership. I mean, it's crazy that Michael Saylor's just hoarding and hoarding and hoarding, right? And then you've got Japan, Metaplanet's hoarding. Now you've got Smarter Web Company in the UK. You've got Strategy B in France. You've got H1, these companies in the Nordics. So there will definitely only be one major Bitcoin treasury company per region. We fundamentally believe that. We believe it's going to be us. And our strategy is at a top level is accretively dilute in a very responsible way. So we will watch our net asset value, our MNAV, and that's just calculating kind of our market cap, our value of our business. And when we issue out shares relative to that, we'll do it in a very conservative, accretive way. So is there a particular kind of Bitcoin per share? I want to make it as much as I possibly can.
Sure.
The mechanics around how I do that is going to be very transparent, very open. So we're going to publish out a dashboard so you can see our wallet addresses. You'll be able to see our performance. You'll be able to see our NAV, our MNAV, our BTC yield in real time. Key metric for us is keep increasing Bitcoin and therefore keep increasing with BTC yield. That will be our focus every single day. That's what the team will be looking at every single day. I want to outperform Bitcoin. I want to give you more Bitcoin than when you bought originally, right? Consistently. That's the objective.
Fadil, jump in.
Amazing. Yeah. I mean, Stafford, earlier you spoke about, the two levels of people, those that you advise on a very high level, and then those that you would meet from where you grew up and so forth. And I think that difference, what that outlines in terms of educating the two different markets is that the latter is looking for sovereignty, and that's something that 80eight has always been focused on, prosperity for all. And that's been our global mission, is how do we provide sovereignty and freedom of money? And I think you've already answered that, and it's fantastic. We're increasing the amount of Bitcoin that you own. But I mean, maybe just to touch and expand on that, with what you're doing at ABC is, how do you give that sovereignty to the individual if they're not actually purchasing the asset directly? They're purchasing it in indirect form. So there may be this level of counterparty risk, could be, or any other type of risk that may exist. And yeah, I mean, how more could we educate users of how important the sovereignty is? And I love how you touched on that ABC should own 10%, 1% of all, I wish 10%, 1% of all Bitcoin in the world, and Michael Saylor is hoarding everything. How important is sovereignty for the African people, not just South Africa, but for the African continent? And I think that's important, because I believe it's our time to shine.
So a couple of things there. I think I just want to make it very, very clear. As a Bitcoin maxi, the best way to own Bitcoin is to buy it and hold it in cold storage. Okay, that is the best way. Okay, so I'm a big advocate for that. I want you to do that. But if you're going to diversify a little, right, look at what we're doing. And, you may have your cold storage. Maybe you want to put some money into, Africa Bitcoin Corporation, because this will be an allocation that seeks to increase the yield on your Bitcoin. So again, I want to outperform Bitcoin. That's why I exist, right? And what I mean by outperform Bitcoin, I just want to give you more returns on your Bitcoin all the time. So I'm constantly looking at accretively incrementing the BTC treasury, right? So as I increase that treasury, as the pie grows, your sliver of the pie gains you more access to the underlying Bitcoin, right? So that's our goal. Now, that's not going to make you sovereign in any way or form, right? That is you taking some risk. We are a traded security. You trust Warren, Wheatley, and myself will say the right things, do the right things. So yes, if you're willing to take the risk to get more Bitcoin in this way, investigate it, look at it, watch us closely. Bitcoin treasury companies in the world are probably the most open, transparent companies in the history of economics that I've ever seen. Michael Saylor has a dashboard. It's the Smarter Web Company. Go Google them. Go look at the Smarter Web Company analytics. It's quite incredible. They put an analytical dashboard on, and you see how much money is. It's like as a business, putting up your bank account, showing how you're putting money into your bank account in real time, showing how your bank account links to your share price, showing how you're diluting, showing your yield on your bank account. I mean, imagine a business doing that. That's what Bitcoin Treasury companies do. They are so open. And that's exactly what we'll be doing. So you'll be able to see it very transparently. But there's still risk, right? I mean, we could say something silly, we could do something silly, but that's the risk. There's some risk, gives you a little bit higher reward, right? When you own Bitcoin cold storage, there's less risk. In fact, there's probably no risk in doing that because Bitcoin is immutable, it's sovereign, it cannot be switched off, etc. So that's one thing. Now, so what all we're doing over here is giving you a little bit more risk exposure to the underlying asset with the intention of growing it. So still not your keys, not your coin, is still the truth. Go own Bitcoin in cold storage. Now, why is sovereignty so important? I think if you just look at Africa, you don't ever want to own property in Africa. Michael Saylor gets up on stage, and the reason I'm, just so you know, it irked me every time Michael Saylor got up on stage. I watched him in Orlando in May. I was there physically at the strategy conference, and I watched him live on stage. Incredible guy. What he's done is amazing. But whenever he speaks about Africa and this kind of derogatory, I flinch when he talks about no one wants to own property in Africa. Like, he's right. Who wants to own property in Africa? Why? Look at our history, guys. Look at the South African rand. Look at the political kind of uncertainty in South Africa. Look at the political instability across the continent. Look at the foreign forces that influence our economic well-being outside of our control. Look at Africa. I mean, we should be understanding this asset. If you're a young person, you should understand Bitcoin more than you understand anything else, because there's so many asymmetrical influences on your money, on your time and energy stored, that you have no control over. So, and our people understand debasement, right? So when you talk about sovereignty, the ability to own my time and energy in an asset that is so scarce that no one can take away from me, no one can switch off, no one can unduly influence, and it just does what it does, is extraordinary for an African. I mean, it is just, and that's why I'm so convicted that this is for us. And I've said this in other forums, like Bitcoin, in my opinion, to Michael Saylor when it goes up and down, to the average American when it goes up and down, to the average guy in the UK when it goes up and down, is an inconvenience. It's irritating. It's a little bit of loss. When our money breaks, people die, right? People actually die. I founded a company called Thumbs Up years ago, where it was a company that built a device that plugged into a phone that converted that phone into a card acceptance machine. It was before Yoko, before all of this stuff, right? We built it. It was called the Payment Pebble. The same time Jack Dorsey did it with Square, we did ours. And it was incredible. And the reason we built that company wasn't because we were going after more money or market share. That company originated because I met somebody that couldn't make a payment, even though she had money in a wallet, and she lost a baby. A child died because she couldn't make a payment. I grew up in Eldorado Park. My granny used to catch 2 taxis and 2 buses to go pay bills. When money doesn't work, when money has the attributes of our money, it tangibly, negatively impacts people's lives. They die. They're impacted by it. The inconvenience of our money. When I walk around in Eldorado Park, I live, when people say, like Michael Saylor and the Bitcoiners and the rest of the world say, broken money and like broken people, broken society. When I walk around in Eldorado Park, I see that. The reason there is no hope, the reason there's constant intervention, is not because there's something wrong with the people, not because there's something wrong with the government. It's because the underlying asset is broken. The money is broken. My time and energy keeps being eroded away, which means I have no hope, which means tomorrow is not something I can focus on. It's all about today. When you're in Bitcoin land, you're like Michelangelo. You can lay, or Da Vinci, you can lay on your back and paint ceilings, right? And I think we can build beautiful staircases. when you can be the Roman Empire and do beautiful things, because when you have hard money, then humans are less focused on diversifying and running. There are 900 $900 trillion of assets in the world. That's commercial property, that's money, that's art, that's equities, all of that. Half of that, $450 trillion in the world, is utility being used for something. The other half of that, $450 trillion, is running away from debasement, right? Running away from 2% inflation, right? So that debasement, they're constantly running away. You're buying a building so you can get yield, and it's trying to save your money in a creative way. So the world's structured in this way, and that world, that 450 trillion dollar world, is flowing into Bitcoin. It's coming into Bitcoin. Why? It's the hardest asset known to mankind. It's somewhere where you can store your time and energy and focus on something. Now, AI is coming along, and young people are worried about AI. AI is impacting. I'm in the United States right now, San Francisco. AI is impacting young people here more so now than ever before. Why? I mean, we're seeing that the unemployment rate is like 11% around the young year in the United States. And on a good economy like this, that's huge. Young people can't find jobs here. So AI has come along. So AI is going to free us up and take away the work. But we also have this hard money that's coming along. And thank goodness we have this hard money. Now, if you're a young person and you don't know Bitcoin, the world is a very scary place. You can't afford anything. You can't afford a house, can't afford a car. And when you do, you're so debt-ridden. You got university to pay off, you got a car to pay off, you got a house to pay off. Like, this can't be the way. And young people get that. Well, guess what, guys? You got Bitcoin, right? You've got Bitcoin. And that's incredible that you got Bitcoin. And when I see young people adopt it, understand it, wrap their heads around it, their outlook looks so different. There's hope. Right? There's hope. The creativity sparks. You want to go and build things because you can build things because the underlying time and energy that you're going to harvest and put is a place that is solid and sound. And that's a beautiful story to a young person versus just putting your money into a bank account and watching every 5 years 40 to 50% of its buying power collapsing and wondering what's wrong. Like,
Right.
where have I gone wrong? What have I done? And a lot of young people are sitting in this situation, and thank God for Bitcoin. Thank God for Bitcoin and thank God for AI. Because you guys can now do things that we could never do. AI gives you the ability to do things that are quite profound. You know, Bitcoin comes along and gives you the ability to store that wealth and that returns and harvest that into the hardest asset ever. And you can go everywhere with your Bitcoin, right? No matter what Cyril and Trump does, Bitcoin doesn't care. Yeah, Trump
Stafford,
can't tap.
just
Just
how's
by
your
the way,
time?
Trump can't carry Bitcoin. Just FYI, right? You can't
Right.
touch it. Yeah.
Yeah. What's your time like, Stafford? You got to go. You're going to
Yeah,
the
I've got to
airport?
go. Gotta run.
Okay.
But I want to encourage young people. So if I want to give young folks some advice, study Bitcoin, get the Bitcoin standard, Broken Money. But these are incredible books. If we can put it in the show notes or when we publish this out. Study Bitcoin. When you buy it slowly. Go into an exchange, buy it, understand it. Go into Bitcoin mining, understand how Bitcoin mining works. You know, I have a company in South Africa that's working on Bitcoin mining right now. I mean, it's going to be incredible when we announce this thing that we're doing. But Bitcoin mining is fascinating. See how the protocol works. When you get into this world, it's a rabbit hole that you fall into, but it's the most amazing rabbit hole you could ever fall into. And it's here to save your life. It's here to change your life. It's here to save your life. And it's not a company. It's not a thing. It's not Stafford. Bitcoin doesn't have a CEO. It doesn't have a chief marketing officer. It doesn't have anyone, right? I'm just a
Amazing.
representative with no undue value outside of just believing that Bitcoin is for everyone.
Yeah. All right, Stafford, thanks so much for joining us. That was a fascinating masterclass in the background of Bitcoin. And we got to talk again. And I think one of the subjects that you touched on there, AI, how that's going to affect our future and our work, and how Bitcoin ties into that. Because I think
Yes.
that's a subject for another day. So we'll set that up, right?
Sounds good. Yeah, AI and Bitcoin. I actually did a little bit at a conference last week on it, and it fascinates a lot of people. I think they are so tied in. You cannot have AI without Bitcoin. Well, AI without Bitcoin means fake news. AI with Bitcoin means
Verification.
verification, but also energy. You cannot separate Bitcoin from energy. And AI right now, the biggest issue with AI is energy, is electrons. And that's a play for Bitcoin mining, which is the most beautiful play ever. So they're coming together in this beautiful, beautiful way. So let's talk about that next time.
Yep. Thanks very much, Stafford. See you soon. Ciao.
Cheers. Bye-bye.
We need you to keep your app open or reboot it later. Yeah. Thanks. Bye. Okay. Shall we carry on for a bit? Fadil, shall we carry on for a bit?
Yeah, sure. I got to jump into something else in a short bit, but maybe just to have a little bit of a conclusion. I think that would be great. The information that Stafford passed was awesome, and I think important for a lot of our users and listeners.
Yeah.
Yeah.
So I would just pick up on where to start studying this. I think the first place is Satoshi Nakamoto and then the Bitcoin white paper. It's only 9 pages long, believe it or not. It was written in 2007, 2008, and it was written at the time of the financial crisis. It was written in 2008 because the financial crisis was happening. And he saw that, listen, there's something wrong here. There's 10 million Americans got booted out of their homes. There's about 100,000 South Africans got booted out of their homes because they lost jobs, they lost income, and they were unable to afford their mortgages. And he saw the problem here. It's the banking system. The banks got bailed out. The banks got a free ride through that whole thing. And he came up with this absolute work of genius, which is Bitcoin itself. And it lays out what is the fundamental protocol here underlying Bitcoin. And if you look at it today, it is this unbreakable network of tens of thousands of nodes that are doing the mining and they're doing the validations of the transactions on the Bitcoin network. Quite astonishing that it developed exactly the way that he predicted it would do. I would also say study the Bitcoin Standard by Stafford Masie, and he wrote a follow-up book called the Fiat Standard. And he made me aware of something that I didn't know before, and that is everybody's chasing returns. They're trying to beat inflation. They invest in the stock market. And the whole thing about the fiat currency system, and this is what Safadine emphasizes, is it forces you into speculation. It forces you into high risk, sometimes high risk instruments and investments, whereas Bitcoin doesn't do that. And I've done a graph. I wrote this for MoneyWeb, and I every year or so I update it, where house prices in South Africa. And I looked at a 1 million rand house 10 years ago would have cost you 1,500. I forget the exact figure, 1,500 Bitcoin. Today, it would cost you about half a Bitcoin. And that's even allowing for the price appreciation in houses. And you can take the same with any asset. Bitcoin is deflationary. It forces prices down. So if you started, investing in Bitcoin 10 years ago, you could now buy that 1 million rand house for half a Bitcoin. Much easier to do it this way, much easier to save. The point is, you got to start saving. You got to, you say, well, I don't have anything to spare at the end of the month. Well, you have to create that space, and you have to create some, where it's $1,000 or $2,000, and start putting that aside, what we call dollar cost averaging into Bitcoin. Over to you, Zaidan or Fadil. Actually, Zaidan, I wanted to ask you a question, because you're from the, your peer group, people who are, in their 20s. Do they understand Bitcoin? Are they saving in it? Do they see the risk of continuing to invest in or save in fiat? Fadil, maybe let's just close off here. Because 80eight, first of all, I think people should understand they should open up an account with 80eight, where you can buy crypto. And you can, as far as I understand, you can even put yourself on a dollar cost averaging app. In other words, deduct $500 from my account every week and just put that straight into Bitcoin. Maybe you can clarify that point. But the point I really wanted to discuss with you is you also have done a lot of work on Bitcoin reserve strategy, right? Okay. So we're talking here to company owners and shareholders, maybe not in the JSE level, but in the medium sector, which there's a lot more flexibility in doing this. And just talk about that and why that's advantageous.
Yeah, absolutely. So, Kiran, we have a product. It's called AutoStack. it's just gone live for a lot of our customers in beta mode, and it's going live for the greater community as well. So definitely, I encourage a lot of users to get into 80eight and set up an auto stack or create a stack. You can create that stack from as little as 200 Rand a day, 200 Rand a week. You can create any sort of type of recurring payment, either from your wallet if you hold funds with 80eight, or even from your bank account. And it's a very, very easy setup. So it's quite a niche feature that gives users an easy way to stack up their Bitcoin and any other assets if they have the appetite to do so. And then also on the higher end things, it applies to companies who are looking to park excess cash where they believe in Bitcoin, and they would like to accumulate Bitcoin and start putting it on their balance sheet as a recognized asset. Definitely agree with Kiran that it's not just a security, it's a commodity that should be on your balance sheet and should be accumulated. And as a traditional treasury company being focused on SMEs and other businesses, in whether it be their payments or managing their cash and putting it into different types of investments, we've really pivoted into helping companies acquire Bitcoin, whether it's through our product offering or just in a simple means, in directly dealing with us and putting that on their balance sheet. So companies who are profitable, who are seeing excess cash on a yearly basis, they're looking where to park that cash. They may not want to park all of that cash in their bank account, and they see belief that their companies will be successful and they could park that into an asset like Bitcoin. So how they buy that, how they accumulate it, and then how they show it on their balance sheet, and how they even work through their taxes when the tax season comes, is an important strategy that we help a lot of our clients with. And being focused on that SME market has a very different effect than focusing on a high net worth who has piles and piles of cash, or even a big corporate now who has a lot of governance and a lot of approvals that they need to go through in order to accumulate the asset. The SME, what we feel we're doing for them is giving them that sovereignty, which is important for their growth and their business overall.
Right. And I guess we should also mention stablecoins has also become an interesting treasury instrument. So you can instead of saving in rands, you can save in US dollars with stablecoins, which are the crypto equivalent of the US dollar, fully pegged one-to-one with the dollar, right?
Yeah, absolutely. And I think that gives a lot of people a lot more freedom than what they currently had in getting access to dollars. Although that currency debasement is still there, we still live in an economy that's emerging. And when you look at the Rand dollar, we have depreciated over time. So I think it's quite important that people have that access to things like stable coins, where they can, again, hold it on in their own wallet, hold it on their balance sheet, or even just hedge themselves from currency depreciation, which is important in the SME market today.
Well, I think we wrap it up there. That was a great discussion. I think it was an absolute masterclass in a little bit of the history of money and what's the money of the future. And I think we need to follow this up with a little bit more of a deep dive into AI and the future of work, and Bitcoin, the future of savings.
Absolutely. Looking forward to the next one. Thank you, Kiran.
All right. Thanks, guys.